can see my screen correct. A lot of noise coming from somewhere. Alright, looking at this calendar at 4 o'clock, 4:30. We got a lot of news coming out on the United Kingdom, which is the Great Britain pound, and the UK, the euro dollar. That's what that's gonna affect. Which pair do I want to start on first? Let's do the USD. First things first. Everybody mute your mics. once we have our line chart pulled up, as always, we'll start on the monthly chart. Now I want to keep you guys on the 4-hour chart and above. So the 4-hour, daily, weekly, and monthly. But first things first, on the monthly, these indicators, these lines, horizontal lines, they're the period separators. Control Y on your chart puts those on and off. Control G turns your grid on and off. You want no grid, you want period separators. And we want to go back at least, I say 2, no more than 3 periods, and indicate each period's high and low. Starting on the monthly. So we start here from left to right. See, because this period to this period, the low is actually right here at the end of it. The low of this one is right above the low of the last one. Now on this one, we can I think it's safe to say we can go ahead and mark this as a high for this current one. We click on our candlesticks, that's what it looks like. But now we'll go back to our line and we'll go to the weekly. We'll do the same thing. We'll go back about 2 periods. So we're right in here. The high right here. And the low is here. Here, the low is here, and the high is right in here, so we're not going to worry about that. And here, we can go ahead and pop one there. Now, if you look at our candles, now this is what we got. Mind you, we take trades based on our analysis, based on the close of the candles. Okay, now we're going to the daily. Now for the daily, you can go back, I say, between 5 and 6. Between 5 and 6, I say between 4 and 6. Between 4 and 6 periods. So we have the current period, 1, 2, 3, 4. Let's do 5. Here we have the high of this period. Low of this period's already checked off. We have the low of this period. And I'm not even going to worry about up here because I can clearly see it's in a downtrend. But if you weren't able to clearly see that, of course, this period's low would be there. This period's high would be here. This period's high would be here. If we go here, we have this period's low, this period's high. And here in this current period that we're in, we have the period high, and the low is yet to be established. So now if we come into the 4 hour, on the 4 hour chart, you don't necessarily have to go back any. I take that back. On the 4 hour, go back roughly about 2. So we have 1, 2. And we would knock this out. All the rest of them are pretty much already squared away. So now we'll go back to our candles. Now if we notice, we have clear levels and clear zones indicated. 15-minute chart is always going to be our entry. We're always going to take our entries based on the 15 minutes. Look at this damn euro pound. Alright, we got our stops right above this high on this euro pound, so as long as we don't head up, but we do have some high impact news coming on the pound, so that might spike it up above that high, but we got our stop like literally sitting right on it. I actually think my stop is actually too low. I think it should be at 850. It's at 800. But oh well. Let's go back to this Aussie. Alright, back to the Aussie. Now you see we have clear levels. Now the daily cycle or the market trend cycle typically lasts about 3 days. So between 3 and 6 days, or between 4 and 6 days. That's why I say on the daily time frame you want to go back at least about 4 to 5 days when you're marking your period highs and lows. Now on the on the 4 hour chart, each period from here to here is 1 week. On the daily, from here to here is 1 month. On the weekly and the month, it's years. You see how there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 candles. This candle would start the next period. Here's January, February, March, April, May, June, July, August, October. January, February, March, April, May, June, July, August, September, October, November. So that's right there is 11. And weekly, of course, it separates the years too. It's 52 candles to form one period. But okay, back to what I was saying. On the daily, we're gonna go back 4 to 5 days because that's what we know the cycle lasts 4 to 5 days. So when I say the cycle lasts 4 to 5 days, that means that's how long the swing trades typically last. They last for a swing of when they're in trend. It's going to last 4, 5, or 6 days. Typically never less, typically never any more. So you want to, like I said, on the daily, we got the current period, last period, and the period before that. And we'll just hit those highs and lows real quick. What typically, in essence, what I'm doing, marking these highs and lows, is I'm marking these swings, support and resistance. Of course, support is going to be below, resistance is going to be above. I'm going to come back to this Aussie. I just want to break down this euro pound again, make sure it's not in fact rising, and it is going to keep going down because my stop is really, really, really tight. Okay, where was I at? Okay, we got the high, low, high, low, high, low. Okay, and we got the low, high. Now, right in here, we do see a lot of little pivot action, so we can drop one. Right in there. All right, now we'll hit our candles. Come in here, see what we got. We see we're at a level here. We'll go to the 4 hour to see exactly really what's happening at this level. 15-minute chart will show us even more. But what we're doing is, if we identify these levels on a higher time frame, such as the daily and above, the distance between these pips is much, much, much greater than the distance between these candles. You see, this candle is at 89,740. The high of it's at 89,760. So this candle really isn't any movement. But if you look here on the daily, these candles are thousands and hundreds, tens and twenties and hundreds of pips each. So in essence, find the zones on the higher time frames. Then when those zones are met, you want to take a look at something like your entry time frame or your lower time frame to kind of see what pattern is forming inside of these patterns. Like right here, we're looking at the monthly. We know it's November 15th, second week in the month. So we know so far it's been, or third week in the month. No way. Well, it's the full second week. So we could clearly see that November was the end of this week, all of this week, and this week. Half of this week, one full week, and so far we're halfway into another week. We know 4.5 candles is what's going to take to complete a whole month. And that's just stuff that you already know, ain't got nothing to do with Forex. You know it's typically 4 to 4.5 weeks in every month. Everybody knows that. So you know it's going to be 4 to 4.5 candles to make up a whole monthly candle. Alright, so these 3 candles right here so far make up this month. Looking at this month, I'm expecting the high of last month, which is right in here, to be rejected. Okay. And I expect it to be rejected to the point where, if you can look here on the daily, we have a range. Market's moving sideways. It's not moving up or down for the past 3 months. It's moving sideways. And we can go to the monthly chart and look at it. Down, up, down, up. past couple weeks, down, well, up, down, up. We can see it clear on the daily. Up, down, up. Okay, so once we've identified those the zones on the higher time frame, as I said, then we hop in here and we go to our lower time frames. Remember, 15 minutes is always going to be your entry time frame. Always take your entry based on the pattern that you discover on a 15-minute chart. If you identify the pattern on the daily, the 4-hour, and the hour, and you've identified the pattern, you don't take the trade until you get the right pattern that you're looking for on a 15-minute chart, which is typically going to be something like this: a triple top, a pin. You definitely, when you're taking swing trades, you always want to make sure your entry is above or near the previous day's high, because in essence, what you're getting is a high area. Right, let me go out here. Because if you look at the high yesterday, which is here, in essence, you're really just getting a triple top pattern at yesterday's high. A triple top, 3 rejections, 1, 2, 3. Now, this is 3 rejections over 3 sessions, because I know that here is the New York session, and this is just eyeball work. This is the Asian session, and now we're going to be in the London session. So this is 3 rejections from one level over 3 different trading sessions. Which is great, what's the word I'm looking for? Great, damn, what's the word I'm looking for? Oh, my mind just went completely blank. Those are great qualities to have in your trade. First and foremost, a great pattern, triple top. One of the strongest reversal patterns. With it being, what is this, an hour into the session? Okay. Okay, yeah, the triple top pattern. 1 hour. That triple top pattern that you see on the 15-minute chart is painting this picture on the hour and painting this picture on the 5-minute. You can really see a clear triple rejection here. Touch, touch, touch. Reversal 3 times. Let's see how this hour candle decides to close. And I think I'm going to take a binary options trade on the euro pound. All right, now I'll show you an example of a perfect, well, great, what it looks to be like great opportunity to trade. Now you see how this pattern that we're getting, this would be considered the M. This would be the first wave up. This would be the second wave up. This would be the third. This would be the second leg down. Now, if we get this pin here, with this being yesterday's high, this blue dotted line, we get a bearish pin right here. We're going straight down. If we get a bullish close above this candle, if we get a bullish candle above here, we're more than likely gonna continue to push. And if we continue to push, our next level of interest would be here. This is a bearish pin. This is if we wanted to, if it closes like this, 9 times out of 10 we're gonna go straight down. And when I say straight down, I mean straight down. Okay, now notice how we had a triple top on the 15 over 3 sessions. We can clearly see the triple top on the 5 minute over the 3 sessions. We have a double top here in the current session on the 5 minute and a triple top on the on the 1 minute. High to a high, low to a low. Now, remind you what I said, if we close bearish right here, we're going straight down. Now I just took a sell on the Euro GBP expiry for 930. Entry above 0.897. Now that's a Euro Pound binary options sell or put. For this Euro Pound at 89,710 or higher. That's what you want your strike rate to be. You want your strike rate to be above 710. Last 3 digits. Alright, we got 2 minutes before this 15-minute candle closes. And that binary trade that we're going to take is going to be for 30 minutes. Down on the Euro Pound. Yeah, Forrest Gomez is the only broker for binary right now. I have another one, but I haven't got around to testing them out yet, so I don't know if they're legit yet. Alright, you see how we got the bearish candle that I was speaking of? Now there's a high, very, very high probability that we should be going straight down from here. All right, now I have my stop closer than everybody else's. Everybody else took that trade, they should still be in it. I have my stop extremely close. Now there is major news coming on the pound in approximately what was it? It was 20, 25 minutes. There's some news that's coming on this Great Britain pound, which would be for the wick, which would explain why there's such a big wick in the first 5 minutes of this hour. The 4-hour candle is the next candle to close. And notice how we are, let me get this out of here. Shoot. We're at the high of the day, high of the previous hour, which would be so as of right now, this is the highest point. This is the highest price that you could have gotten for the dollar in Australia today. The reason the trades are taken at the high and the low of the day are due to the fact that the high and the low are just exactly what their name is, the high and low of the day. So if you're at the high or the low of the day and you're selling at the high, you know there's no place to go but down. If you're buying from the low, you know there's no place to go but up. Also, I did want to show you guys. This isn't a good example on the RSI. Let me see here. Well, excuse me. Well, we didn't go straight down, but I didn't create the market. But the direction analysis is still holding strong due to the pattern that we're getting. It never does exactly what you want it to, and that's the fucking crazy part. It'll show you something, do the complete opposite, and then show you exactly what it showed you in the first time. That's why timing is very, very, very important. Because although it is definitely looking to be taking a downtrend and a rejection from yesterday's high, If you would have sold here, like we did, still a great entry, but I put my stop above the high, which was right here. On the signal, it was a little bit higher, so you guys should still be good and still in the trade. But but mine was like sitting right on top of the high. So if it went above the high, 1 pip, I was out. And that was why it does that, why it would just go back to the high for 1 pip, is because people have pending orders and stuff up here. So say somebody was reading the charts and they found a buy trend. They thought it was a buy day. You know what I'm saying? And they decided to, 1 second. And they decided they wanted to buy if it breaches yesterday's high. What they would then do is put a buy stop here, which means if it breaks this point, they're in a buy trade going up. The reason why it'll spike right above the high and come back is because people will put pending orders here. So somebody somewhere got triggered in for some buy orders right here with this wick. They got triggered in for some buys, and now the market's going to pull away from them for the whole day, if not the rest of the week. It's going to pull away. So they're stuck at the absolute worst position you could possibly be in on the euro pound for the week. The very, very top. And that is the worst place to be when you're going the wrong way. Worst place to be is at the top when you're buying. Worst place to be is at the bottom when you're selling. Now the Aussie USD is already working for us. Started taking back up. If you look how far down below yesterday's high Australian dollar already is. So this right here would have been considered a breakout. And what I mean by breakout is from here to here, we can see as a swing. You have a low, high, low, high, low, high, market moving sideways. A breakout would be considered this candle breaking out of this range. This is the range here. This is the breakout. So it was just clear to me to buy once we got this consolidation here. Here's the breakout on the 5-minute chart. Here's the sideways market. We can high, low. Now here we're getting the breakout. It should be coming back up at least to right here. Midpoint of the previous breakout. Hopefully this stuff is making some sense to you guys. Here's the euro pound. Still doing what we projected. So the euro pound, that binary trade should just cross over in profit if you took it. Should be good to go now. Let's see if we hold. Now we can draw a trend line. You can clearly see a trend here. trend here, followed by support here. I mean resistance. I'm sorry if my voice sounds a little raspy. It's kind of got a cold or something. Also, if anybody's been trying to email me or anything, I haven't really had a chance to check it this week, so I'll try to get on that as soon as possible. What else is there? Okay, now this the pound, we still have that news coming out in about 15 minutes now. And it's, well, 13 minutes to be exact. Now the biggest, the impact is clearly substantial. Now these 1, 2, 3, these 5 news releases right here are going to both affect the pound and the euro. In my opinion, I see this news release bringing the the euro down and the pound up. So I mean, if my stop wasn't so close, those previous trades that I had, of course, they'd still be in, and they would all be in profit now. But what I did with my tight stop was I simply just protected my capital. Because what if I was wrong? I wasn't, but what if I was? You know what I'm saying? There's always that 1%, you know what I'm saying? You might be wrong, and it's okay as long as you protect them, secure the bag. Gotta secure the bag. And as long as you secure the bag, you're good to go. Bag must be secured. Alright, so like I said, with this news release, I anticipate it taking the euro to the downside. Pound to the upside. Aussie to the upside. As a matter of fact, this pound Aussie here might consolidate. Might not move anywhere. Might start moving sideways. But the high is not out of reach. It's only a pip or two above the high. So it's definitely a target. Look, notice how we are above yesterday's high. Now, let me break down these 3 pairs, okay? The euro versus the pound. The euro pound's going down. That means the euro's getting weak and the pound is getting strong when they're compared to against each other. They really run off almost the same currency, so it's really just a matter of whose economic forecast looks more prominent. So that's basically what moves the market. the forecast of that particular country's currency's economy. So let's go back in. Okay, so the euro versus the pound. When compared to each other, my analysis tells me that the euro is going to be out forecast by the pound, which would draw the euro down, the pound getting stronger. Now here, I see the Aussie versus the USD. I see a big push down. So I would see that the Aussie would regain some of that back against the dollar, just to keep things balanced. You know what I mean? And the pound versus the Aussie would show me that compared with the pound and the Aussie, the pound is doing better than the Aussie, just as the pound is doing better than the euro. The Aussie and the Aussie USD has nothing to do with the pound Aussie. Okay? The Aussie USD has nothing to do with the pound Aussie. Most would look at it and say, okay, the Aussie's strong against the dollar, so it must be strong against the pound and dragging it down. Not true. Great Britain pound and the U.S. economy are two completely different economies. So when you look at the pound Aussie, it's Great Britain versus Australian economy. Aussie dollar, the Australian dollar versus the U.S. economy. Euro pound is the euro versus the pound economy. Now, the major news releases, like say for instance, a major release on the dollar will affect all dollar pairs across the board. Okay. A major release like this coming up on the pound, it's going to affect all pound pairs across the board. Like if it's really as strong and positive for the pound as I believe it to be, it's going to spike this pound Aussie straight up and this euro pound straight down. Like I said before, it was just timing. Timing is everything. Look at the pattern we're still getting. See, this is the pin I was telling you that if we got this pin, we were going straight down. But look at the candle that came right after it. It was a trap candle. Now, confirming my trend, it would have only been two candles that told me that my analysis was still correct after this doji. Candle that went just straight down with no upper wick, or exactly what we see here. Both of those would have been the only two candle patterns that would have held me to believe that my analysis is still correct. Whew. Ah. All right, we got about 5 minutes. Alright, we got 5 minutes. Let's watch these last 5 minutes play. Okay, now all that news is being released as we speak. 1, 2, 3, 4, 5. Previous numbers, projected numbers, actual numbers. Alright, I just had a order triggered right here for another sale. 1 pound. For the most part, just reading the chart and identifying your high and low levels makes sense. And then from there, you just need to. Well, this is the easiest way to trade out of all the ways I've studied and tried or attempted to trade. Using simple support resistance lines and the highs and lows of different periods to identify the swing are the easiest, by far the easiest ways to trade. Easiest and most accurate. Because essentially you're waiting on the pictures to be painted rather than trying to trade based on 4 scene pitch for a scene picture. You're practically waiting until the picture's painted. Now, the next, I say 5 to 10 minutes will tell us exactly if that news was good or bad for the euro or the pound by this high right here. If this high was not in fact a trap, we'll push higher. Does anybody have any currency pairs that they've been looking at that they want me to pull up on this chart? Oh yeah, I definitely do. Definitely think it's gonna hit up there. My projection on the Euro USD was, well, I think Target was here yesterday. I didn't place any new trades on it, but yeah, it would be our target on the 8400 level. Somebody asked me about that earlier. All right, now this right here for this third to fourth. Okay, now one thing about timing, when the high or low is set, expect let's expect that situation or that high to be tested or broke within 30 minutes to an hour. If it's not within 30 minutes to an hour, 9 times out of 10, it's still got room to push, as we see there. And now with this high being breached, now you guys should have just been stopped out on for the first trade. Let's see. All the USD still going good. Now this Euro USD should definitely be going up, which in fact will mean that this news here was very positive for the Euro. Very positive for the Euro and not bad. Notice how I said I expected it to be bad for the pound. I mean, bad for the Euro, good for the pound, which would have drawn it down. In fact, this could be potentially good for the Euro, bad for the pound. And we can pretty much confirm that with this high being taken out. Okay, Euro USD. Let's go to the Euro USD. First things first, I pull out my line chart. So I can find some of these zones in here. All right, looking at the month, we'll go back. 1, 2, 3. Boom. Boom. Yeah, looking at this, breaking down this euro, if we breach this 93.58 level, we'll be going to 22.201. But we'll need this monthly candle to close above this 93.58. Now I do see that happening. I definitely do see that happening. With this euro going the way it is, these major impact releases, we're definitely positive. As you see, the pound is dropping, because the pound and the euro and the pound are in the same ballpark, same arena. So they battle each other pretty tough. So with the euro pound pair showing that the euro is stronger than the pound would be losing investments altogether, while the euro is gaining investments. As you see, it's gaining on the dollar extremely well at this point. Gaining on the dollar extremely well. And I was talking to somebody in the group about this earlier. This Euro USD buy. Can't remember. Notice how we're at another level. Mind you, remember how I told you if you broke this level, we'd be going to this level. That's pretty much how you gotta do it. Trade by the levels. Break down each level. You know, the higher the time frame, the higher the distance. When you get to those higher time frame levels, you look for the particular pattern on the lower time frames, and have a field day. Like if we get a solid stick pattern here, we get a solid we get a solid pattern here showing a reversal. What we'll do is we'll take another position, put a real tight stop. And when the higher the time frame, the stronger the pattern. So if you get let me me see, a pattern like this, a double bottom pattern. Like we did here on the monthly. It's clear that you're going to have a pretty good swing. Because these two distances alone are 3,000 pips, 300 pips, 3,000 pips. 3,000 what? 3,600 to be exact. But now you see here how we came to that next level up, and now we are pretty much, if we get a solid push here, a solid reversal candle, we're still coming down. Essentially what we did was we just hit everybody who was selling, we just hit their stop loss. Which means even if we were to drop, if your stop loss was hit, then you 9 times out of 10 are no longer in the trade. Which means the market doesn't have to pay you any money. See how whenever I take a trade, based on my analysis and based on this here being a spike up, I know that's typically a stop hunt, which means that's typically a trap. I also know that typically it's going to be 20 pips or 200 pips from the entry point, because most traders use a 20 pip stop. So if the market's aiming for stops, this swing is going to typically be 20 pips. And you see it went from 89656 up to 8, well, not 8656, because the high was actually right here at 89798, and it went right up here to 9,050 or 9,070-ish flat, which is exactly 25, almost 30 pips. You also see that we're touching into the overbought area and turning down. Excuse me. Alright, so whoever I was talking to this morning when I told you it was gonna hit the 85, 8400 level, you see what I was talking about now? Now, all the Euro, this news here could have set traders up for a trap as well. See, there's several different scenarios that could have happened when these news releases came out. As you see, it did spike some of these Euro pairs to the upside. But at the same time as it spiked these Euro pairs to the upside, it could have also just triggered stop hunts or triggered traps. Instead of breakouts, it could have triggered traps, which means that the move or the strong push due to the release was a false move. Now if I pull out my Fibonacci on here and we just zoom out and we just go from swing high to swing low. Our reversal area is somewhat where we are now. Our main reversal levels are going to be at 38.2, the 50, and the 61.8. With the 61.8 and the 50 being the strongest, the most precise reversal levels. Here we have an indication of divergence. We have price steady shifting up, but we have momentum steady declining. This is the form of divergence, also a reversal indication. Or not a reversal, more like a stop hunt indication. This not only indicates a reversal, it indicates a stop hunt, which means it's a false move. The two don't even match. Price going up, but momentum falling. Something's wrong with that. Why is price going up if momentum's falling? Because there's so many different momentum indicators. Like when I tell people that I was telling somebody earlier today that trading is all mental. Anybody can click the mouse. All it takes really is patience and a little discipline. Stick to your get a strategy, stick to it. If your strategy is to profit, stick to profit, and you're good to go. Can't use greed, and because greed will kill you. Greed will murder you and your account. Is that all these keep doing? Alright, Let's look at this Aussie USD before we end this session real quick. The pound just fell out. Yeah, pound fell. Aussie USD should continue its up move due to the fact that I'm gonna at least retrace to this midpoint. But alright, ladies and gentlemen, I'm gonna go ahead and work on getting this video uploaded. It's gonna take me about an hour, and I'm just gonna hold these this Aussie and these euro trades for today until I get up in the New York session, and then if I potentially see some more, of course, I'll post them in Telegram.